Welcome back to another Ater video. Make sure to subscribe and like. This is mainly to document my work. Alright, let's go. So, over the last few days, I've been talking about how we could see potentially 293 before our next move. Now, this is because if I come to the 4 hourly, it'll be easier to see. We did have this gap up where my mouse is, and 90% of gaps filled. Every single gap on the stock pretty much has filled. You see, we've gapped up over here, we filled back down. Gap down over here, filled back up, and I said that we need a stable foundation to start climbing up. Now, we came down to 293, perfectly filling this gap, and we actually got a hard bounce if it comes to after hours, about a 6% move in this day, right up to this next resistance level, which is this purple supply box. We finished the day at the bottom of the supply box, and finished after hours at the top of supply box, which is a pretty good thing to see. Now, going into tomorrow, I want to see it either open up with volume, so you can finally push past this resistance and over here, or if we flush down, a good place to buy in would be off this trend line. Now, this is a bearish pennant, and typically how you measure a bearish pennant is you take the flagpole and you put it down. I do not think there is any more downside for Ater. I feel like we're going to have a little relief rally, and there's a lot of relief that's going to come into the stock right now. So if we did break down of this, I've got this blue level lined up, because instead of taking the flagpole, you can also measure it by key levels, and I've got this one measured out, which I'd say to potentially put a buy order in, and I do not ever see us coming down below 240, the bottom of this run up, at all during this period. So now the thing is, with bearish pennants, we come over here, the bearish pennant success rate's only 55%. I had another, over here, bearish pennant success rate's 55%. That's incredibly low, and in fact, every single time I've seen a bullish or bearish pennant, I can't remember one time that I actually broke out the proper way. So this isn't really much to worry about. Instead of worrying about just the bearish pennant, worry about all the technical factors, and then bring that together to make your full assumption. Now, if you come over here, I've got a few examples. These are key memory examples. I remember these examples pretty well. Pretty devastating. We got this one. This was a bullish pennant from AMC, which broke downwards. We've got this falling wedge, which broke downwards, which is bullish, so it doesn't make sense. Here we got this falling wedge, or bearish flag, or bearish pennant, whatever you want to call it, that broke upwards. It doesn't really mean much, so I'm not too worried about that. Now, if we do look closely here, you can see that volume's been trending down, but the price has been trending up since I've drawn this line up. You can see that I've drawn the line up from pretty much the bottom of this run up. This is the bottom, and our volume's been trending down while the price is trending up. Now, this is a volume divergence. You can pause and read this if you want to, but basically what this means is that there's weakness on the seller side, and the buyers are starting to take control over the market because the sellers are running out of ammo, which is a good thing to see. I don't see this coming down anymore. I do see a relief bounce, and I do feel like it's time for a reversal back up to these highs eventually in the near future. Now, this is dependent on the overall market, because the Fed announced they're going to be doing, I can't even pronounce this word, I'm not even going to try, quantitative tightening. Basically, they're going to try to pull $9 trillion out of the economy, which is good for the stock market long term, but bad for it very short term. And the market today actually reacted to this news very positively. As you can see, we pretty much just ran up the whole day, which is a good thing for us. So I do see there's a bit of relief in the market. And actually, if I come over here and I type in SPY, I had this drawn up for a while, and I can see us running up to this gold line at about 430 in the short term. So we do have a little bit of a short-term rally coming on our way, hopefully. Now, I just measured that from a double bottom, taking the neckline and the price action. What was I going to say? Oh yeah. Now, if you've been watching my videos for a while, you would have noticed that this number has gone down, beta. What does beta mean? Beta is how strong the stock reacts to the market. Now, this used to be 2.7, which is absolutely nuts. It means that if the stock market's going down, this will react with a lot of downwards pressure. If it's going up, reacts with a lot. 1.25 is still positive. 1 is neutral, or it does react, and below 1 means it doesn't react. It reacts opposite to what the market's doing. Now, this used to be 2.7, it's 1.25, and I'm going to show you why this is a good thing. If I come over here and I go to Fintel, you'll be able to see that retail ownership in the stock has skyrocketed, and it's the most held retail stock according to Fintel right now. Now, the more that retail holds the stock, the less affected it is by the overall market. And because I believe that we're in a bear market overall, genuinely, then this is a good thing to see, because we're kind of taking control over the overall market. That's it for this video. Yeah, and I'll see you guys in the next one.